Hi guys, this video is to answer a lot of your questions about SROs or stock rights offerings, since I got a lot of questions via social media about it after Metrobank and BPI started releasing their own versions of SROs. So and I hope this helps address if it's something good or bad, or how are you supposed to go about it if you are trading or investing in the markets. Again, the goal of this is to help educate you to make the right decisions when it comes to your stocks and when it comes to your investments as a whole, because I really desire to see more Filipinos not just invest in the stock market, but I really hope that the stock market becomes your becomes a platform for you to reach your goals of financial freedom. So first of all, an SRO is a stock rights offering. Why is it done? Why do companies make it happen? To make it simple, it's just this. They use an SRO to raise money. They would use an SRO to sell a specific number of shares to its current shareholders. So the money that they would use or they would get from selling shares there is something that they would use to get for expansion or to pay off more debt that they currently have. So basically, it's just a funding mechanism for them. It's called a stock rights offering because the only people who would be able to participate, who would be able to buy the shares there, are current stockholders. So what happens also during the time, it's offered to stockholders, but it's not just offered to stockholders, but it would be given normally at a price lower than the market price. It's given at a discount for shareholders to have the ability to buy it at a cheaper price. So it's called the stock rights offering also because you have an option whether to participate in it or not. The thing about that is this: if you participate in it, of course it creates, you have to think about it, when they release more shares, they create more shares, it will increase the shares that are in the market. So essentially it will dilute the EPS of the stocks that are there. More shares will create a dilution of the EPS of the stock. So with that as well, when they would create and increase the shares that are available, in a sense, no, it makes the EPS less attractive. Number two, it doesn't really make the stock cheaper, but it increases the number of shares that are there. So if you are a person who wants to be a shareholder, if you do not buy, your shares or your percentage in the company becomes relatively diluted as well. Your stake, the number of percentage that you have in the whole becomes relatively smaller, and it becomes an opportunity for you to buy it at a cheaper price as compared to where the market is in general. So why does the market, or why does the stock normally go down after an SRO is given? You have to understand this because it's given at a discount. The market normally tries to catch up with it, with the price that it is offered to. So it normally goes down in proportion to what the value of the SRO will be as well. So should you take it or not, that's already a personal question. But here's the thing: if the stock goes down because of the SRO, it doesn't change the value of the company. Second is, it does not mean that the stock is cheap just because of the SRO. You have to remember, if the stock drops because of the SRO, it doesn't mean that it's at a discount already. It just means that it dropped because the market chased the price of the SRO as well. So there. And if you're trading in quicker durations, for me, I'm really more of a technical person. So what does that mean to me? How does it impact my trades? For me, upon hearing about it, and if the stock is at the resistance already, I'll just take profits still. At the end of the day, I allow the charts to dictate how I do my buying and selling. I allow the charts to dictate how I go about my trades. So if I hear that there's an SRO also, but the stock is at the support and it's still bouncing, I'm not gonna sell. My trading is really defined on how I would go about my technical analysis. So there, on a technical aspect, if you're trading, just follow your support and resistances, just follow your technical parameters. If you're investing, if you don't buy, your shares get diluted more, you get a lesser proportion of what you're supposed to have. If you're investing also, you get to buy it at a cheaper price as well. So I hope that answers what you need to know about SROs. It's a funding mechanism for companies, for them to raise an additional level of cash for them to use either to expand or to pay off debt. And for you as an investor, it's an opportunity for you that they would give shares to you at a relatively cheaper price. So that's it for now. I'm going to give you more videos here from London to give you the basics of how you can trade the markets with ease and confidence. So this is Marvin Guillermo. I hope this helps you trade well, trade strong, trade smart. See you all again soon, and I hope you reach your goals of financial freedom.